Good evening. Crisis in Paris tonight after the French government has collapsed. A political storm is brewing and its ripples could shake all of Europe. At the centre of the controversy is the no confidence vote in Prime Minister Michel Barnier, a bold move with the potential to redefine the balance of power in French governance. So, what happens next? What does this mean for France's economy? And how might the unfolding crisis impact Europe's political and economic stability as a whole? Stay with us as we deep dive into this unfolding story with insights from key experts in Europe. But first, our correspondent Ross Cullen has more details from Paris.
I'm here outside the AnewZ Palace in the French capital. It is the official residence and the office of the French president, and it is where the outgoing Prime Minister Michel Barnier arrived this Thursday morning to formally submit his letter of resignation to the French president. It comes after the drama of Wednesday evening in the National Assembly, that historic vote, more than 330 lawmakers voting to oust Michel Barnier as Prime Minister and to topple his governments. It's going to be a tough job for whoever Emmanuel Macron appoints as the next Prime Minister because of a lack of a majority in Parliament. Ever since the inconclusive election in July, which left this country with a hung Parliament, the National Assembly has pretty much been split into three blocks: the left and the far left, the centrists focused on Emmanuel Macron's party, and the far right. All of them more or less equal in size, none of them anywhere near to achieving a majority in Parliament. And we've already heard from one of the leaders in the far left party, the France Unbowed party, this Thursday morning. He has been saying that his party will submit another motion of no confidence in whoever is named as the new Prime Minister unless that person comes from his party or another left-leaning party. So already threats and pressure coming in from parliamentarians on Emmanuel Macron. But all of this contributes to the ongoing constitutional uncertainty after that historic vote on Wednesday evening. Ross Cullen, AnewZ at the AnewZ Palace in Paris.
Now, European markets had already suffered a difficult week before this crisis reached its most recent conclusion. William Denislow reports now from Brussels on the latest reaction from the heart of the EU.
Guy, the collapse of the French government this week has fueled concerns over the wider impact this could have on the European Union. It's the first time a government in France has been forced out of power by a no-confidence vote since the 1960s. And fresh parliamentary elections can't be held until next July. European stocks did tick up in early trading Thursday, but fears linger over how this instability will affect Europe's second largest economy. Prime Minister Michel Barnier's government collapsed after losing a vote of no confidence just 3 months after taking office. Groups on both the left and right of the political spectrum ousted him after the former Brexit negotiator moved to pass a budget without a vote from lawmakers. When asked for reaction to the political crisis in France earlier this week, the EU Commissioner's chief spokesperson said it's never happy when a government falls, which can lead to insecurity. Paul Pino added that there could be wide-scale implications when it comes to the economic context as well. The French economy is expected to expand 0.8% next year, with analysts fearing that political uncertainty could hamper growth going forward. With German elections set for February, there are fears that political turbulence in the EU's two largest economies will hamper the bloc as it braces for a potentially more protectionist president when Donald Trump takes office in the US next month. For some, the turbulence in France could bring opportunity. Negotiations are heating up to strike a trade deal between the EU and South American nations of Paraguay, Brazil, Argentina, Uruguay and Bolivia, known as Mercosur. France has opposed the agreement, citing environmental and domestic farmers' concerns. But experts say political distractions at home could open a path for a deal to be done. William Denslow for AnewZ in Brussels.
Well, joining us to discuss this, we have two expert guests. First, let's go to Paris and speak to the celebrated economist, Dr. Pascal Lima from CGI. Dr. Lima, thank you very much for joining us. What economic challenges has France been facing then after this Barnier no confidence law? And how could this political crisis exacerbate this?
Yes, France challenges different sort of problems, of economic problems. We have recent economic challenge like persistent inflation, which remains still high in France, even if we have made progress, of course, in relation to the inflation. It continues to erode household purchasing power. That's the first point. And the second point in the recent economic challenge is a high public debt and a low economic growth. And when you have the combination of both high public debt and low economic growth, of course, it's a real problem for the trajectory, the budgetary trajectory in the long term. And we can add to that we have also a structural unemployment, a high level of structural unemployment, although improving. Of course, unemployment remains higher than in other European Union in average. And we can repair that in France, even if we have a good news at the international level with the Brent barrel. In France, we have still the pressure of the price energy, which impact directly the persistent inflation, of course, would contribute to this persistent inflation. So, what we need to understand on the impact of the political crisis after this economic aspect is that when you have not an approved budget, the essential reforms can be stopped. Of course, so there is a problem of credibility, with a budgetary stalemates, because it can erode confidence, it can erode the confidence of the business, the confidence of the household, and they all may delay investment and spendings, deepening a little bit more of the economic slowdown. And then the last one, which is the third step. Unfortunately, we have not this third step today, but I fear that it might happen if we have not more political stability. It's the social tension. With political instability, we exacerbate the labor strikes and protests, and it can also disrupt the economy a little bit more.
So how do political uncertainties in France then impact investor confidence and economic stability within the Eurozone?
Well, we have three determinants impact. The first one is the capital flight, because foreign investors may stop or delay their investment in France. That's why the government, Emmanuel Macron, has been to Saudi Arabia. It's to be sure that the investment will continue in France, of course, with this bilateral partnership that must be improved. He must find other geographic zones to contribute to this investment. The second one is the rising spread, because French sovereign bond yield may rise. Of course, we can create tension in the Eurozone and a domino effect, because exactly like in 2001, in the debt crisis and the European debt crisis with Greece and Portugal, today France pay more than the Greece on the bond market, which means that France is riskier than Portugal, for example. So we can have a contagion effect from a big country, which is France. Of course, the uncertainty in France could fuel fears in other vulnerable Eurozone economies like Italy or Spain. So capital flight, rising spread, and contagion effect, it's a very, very, very bad contribution. It's a very bad situation to have a high contribution to the growth. And the INSEE have anticipated that France could lose 0.5% of the gross domestic product if we combine all this situation.
Well, thank you, Dr. Lima. Now, also joining us in the studio is Professor of Public Finance and Business Strategy at Nova SBE, Antonio Late. Professor Late, thank you very much for joining us. I'd like to start by asking you to what extent this government crisis could now affect France's ability to meet economic targets such as debt reduction on green transition goals, for example.
Thank you for having me. I think even prior to the fall of the government, was already having some trouble satisfying the investors in French assets, namely French debt. Just because has been increasing its debt to GDP ratios to levels that now surpass those of some countries that were involved in the public debt crisis of 10 years ago. And it's running successive rates in excess of 5% of GDP. And those deficits in excess of 5% of GDP clearly doubts about the ability of France to fulfill its obligations with its creditors. Of course, being France, markets are stepping up carefully because we're talking about the euro's second largest economy. But the major problem, and it's connected to the fact that led to the fall of the government, is that French politicians, and to some extent, as far as we know, the French are not willing to make the adjustments that are necessary to engage into a fiscal policy that is more in line with France's responsibilities and the country's ability to keep maintaining a huge public administration. We should bear in mind that public administration in France is very large, not just in absolute terms, but in relative terms. They have also, to finance that, one of Europe's largest, if not the largest, tax burden on the economy. And that, of course, creates a problem that needs to be solved through reform and through changes. And that's exactly that seems to be in the middle of the fight between those that think that something needs to be done for France to re-encounter itself into a path of growth and do whatever needs to be done in terms of digital transformation, in terms of taking care of the investments needed for climate change. But at this point, with these financial problems in the public sector, it's very difficult for France to do so, and they are not even being able to reach an agreement on keeping things as they are.
Professor, France obviously has a key influence over other member states in the EU, playing a critical leadership role. To what extent does this crisis limit its ability as a country to lead?
Well, for now, France has the immediate problem of not having a proper government because the government fell. But even after they have a new government, and if they manage to do so in a relative short period of time, they do have the problem that caused the fall of the government in their hands to solve. And it's a very tough problem to solve, not conceptually. Conceptually, it's very easy what they need to do. The problem is that both the political class, the political parties, and most of the population, the French electorate, are not willing to accommodate the reforms that need to be done. France needs to find another way of living with its the growing weight of its public administration, the fact that they already have very high tax burden and that some of the new taxes that they are envisaging, some of them are very detrimental to the economy. Others will probably not produce the revenues that they are expecting because they are targeting, individuals and agents, which will probably not be willing to pay that, and then there is capital mobility. But we are all aware of that. And on the other hand, that is happening at the time when Germany is facing problems of its own and also is going for elections and probably for another period of long negotiation, as usually in Germany. And therefore, the Eurozone now has clear problems with the two leading economies. The German problems, even though they are also structural, they're probably easier to lead. They're not so difficult to surpass in short term, but France will really have to cope with something that has been mounting over the last 20 years and now needs to face a solution that not be just to put a band-aid on the problem. They really need to go into surgery, and it seems that they're not willing to do so. So it's really a problem not just for France, but for the Eurozone.
And let's look at some of those huge sectors that exist within the French economy. So energy, agriculture, manufacturing. How do you expect this crisis to impact those sectors?
Well, it all depends on markets react. If we keep seeing that the political solutions do not happen, or even if they happen, they do not tackle the problems, then financing France will become more difficult. They will be tempted to probably try to have the ECB to play a role in helping to diminish the short-term implications of their problems. But again, this will not be a solution, and will probably bring back some of the things that we are solving just now, like inflation. The problem there is that this, even though it's not a crisis that's with the real economy, so to speak, it will affect it because financing will be increasingly more difficult because the pressure in the cohesion of the Eurozone will amount to a much higher level than what we are seeing so far. So it's really a very large problem that people have been trying not to really solve. We have been trying to look the other side, but the fact is that markets are already financing France at the rates they are financing. And for the time being, Greece is in better shape and going on a better trend than France. So this is really not just a French problem, but a Eurozone and an EU problem.
Not just a French problem, as you say, Professor. So how does France and the EU work together to contain the problem, to mitigate the potential instability across the Eurozone that could occur as a result of this crisis?
This is a very tough question. First, because it's very hard to envisage exactly what's going to happen. Second, because everybody needs to be careful with words at this point. But what I can say is that clearly the other countries in the European Council will have to help France solve their internal problems. Of course, that doesn't go well with the hubris of the French Republic. But the fact is, French came to a position where they still can solve the bulk of the problem that they have created on their own, but probably they need a little push from the other member states. And I think that certainly this is being already considered, not just in Berlin, but in The Hague, in Madrid, in Rome, in many other places, because they need a solution. And the propositions that we have, either from the radical right and the radical left in Spain, in France, I beg your pardon, are clearly just to increase the problem further. So, it's important that the French understand that they are in a position where they really need to go back to the drawing board and see what sort of measures they can accommodate, and really understand that the path that has been followed is not sustainable, and if not changed, will certainly lead to a major problem for everybody, starting with France. So I think that we are at a crucial point. Markets have been prudent, which is good. But we never know. I hope we will not have what we call a Liz Truss momentum here, because it would be very hard to tackle given the size of the French problem and given the importance of France within the Eurozone. But I think we haven't reached that point. I hope we will not reach that point. But we have to make sure that we reduce as much as possible the probabilities of such a moment to happen, and we have to act now.
Professor Late, thank you so much for joining us on AnewZ and sharing your insights with us. Well, that is all we have time for on this hour. Please do stay with us on AnewZ, and from all of us here in Baku, we wish you a very pleasant evening ahead.